Welcome to the Explainer. I am so incredibly excited to dive into today's session with you because we are decoding what is literally one of trading's most powerful reversal signals. We're going to strip away all the complex jargon, clear out the noise, and give you the absolute ultimate beginner-friendly guide to mastering the shooting star pattern. Let's get right into it. Have you ever bought an asset right at the absolute peak? You know the feeling, right? You hit buy, you're feeling great, and then immediately, bam, the market crashes, leaving you completely trapped right at the top. It is absolutely the worst feeling, especially for a new trader. But here's the thing, the market actually leaves clues. Okay, let's dive into this and figure out how to stop buying right before the drop. So here is our roadmap for today's explainer. We'll be covering the shooting star pattern, how to identify resistance, a real-world analysis of xauusd, setting your stop loss and targets, and finally, a safety checklist. And I promise you, by the end of this, you're going to have a fully risk-managed strategy ready to go. All right, Section 1, the shooting star pattern. Because before you even think about placing a trade, you have to read the battle that's happening right there on the chart. Think of this pattern as an actual war. The shooting star is a single candlestick that shows up right at the very top of an uptrend. Basically, the buyers were totally euphoric, right? They were aggressively pushing prices higher and higher, but then the sellers stepped in with zero mercy. They violently slapped the price right back down near the open, and what that does is leave this long visual trail of total buyer exhaustion. Now, let's take a really close look at the strict anatomy here. Because listen, not every long-tailed candle you see is a true shooting star. Actually, scratch that, most of them aren't. The real body must be small, and it's got to be tucked right down into the bottom 25% of the candle. The upper wick, that has to be 2 to 3 times the length of the body, and there should be almost no lower wick at all. You really need to memorize these exact proportions, because that is exactly how you filter out all that random market noise. Moving on to Section 2, identifying resistance. So, the crucial point I want to make here is that the prettiest candlestick pattern means absolutely nothing if it happens on the wrong battlefield. Context is everything. You see a shooting star just floating out there in the middle of nowhere? That's just noise. Ignore it. But a shooting star slamming directly into a strong established resistance level, now that is a golden signal. Trading this pattern without any major resistance nearby is literally a trap that beginners fall into constantly. Don't be that trader. Let's simplify this concept a bit. Resistance is really just a historical ceiling. Think back to the past. When the price hit the ceiling previously, the supply of sellers waiting there was so massive that the buyers were just totally crushed. So, when the price returns to this exact same ceiling and prints a shooting star, well, the probability of another reversal happening is incredibly high. Okay, Section 3, xauusd real analysis. Let's take all this theory out into the real world and see exactly how this pattern looks in action on a gold chart. Let's follow this real trading timeline together. Back in mid-July 2023, gold rallied super hard right up into a massive resistance zone. Then on July 18th, boom, a textbook shooting star printed right at that ceiling. The buyers completely failed, and this brilliantly illustrates the exact moment that the bullish momentum just died. By late July, as you can see, the price had completely plummeted back down to the previous swing lows. It played out perfectly. Seriously, burn this next idea into your memory right now. The shooting star is a warning sign. It is absolutely not a green light. Amateurs always rush to sell the exact second the candle forms. Please don't do that. The true trigger, the actual green light to act, is the confirmation. You have to wait until the very next candle breaks and actually closes below the shooting star's low. Which brings us to Section 4, stop loss and targets. Listen, trading is purely a game of probabilities, not certainties. Some signals will fail, for sure, so having a protective shield in place is completely mandatory. Here is the golden rule that the pros use. Never, ever risk more than 1 to 2% of your total account capital on a single trade. No matter how perfect the setup looks to you, sticking to this tiny amount of risk is exactly what keeps you alive in the game through all those inevitable false signals. Just consider how the math scales here. Proper position sizing is the real secret. If you stick rigidly to a 1% risk rule, it honestly doesn't matter if you're trading a $25,000 account or a $100,000 account. You just adjust the number of shares or your lot size. By doing that, your actual dollar risk stays completely flat and 100% under your control. So mechanically speaking, your stop loss must be placed just slightly above that upper wick. Why there? Well, because if the price breaks above that high point, your entire bearish thesis is instantly invalidated. It's over. As for your targets, you always want to scale out safely. Take half your profits at the nearest swing high to protect your capital, and then you can target the next swing low for the rest of the position. Alright, Section 5, the safety checklist. I want you to consider this your ultimate pre-flight routine. This is what's going to prevent you from making impulsive, emotional decisions on the charts. You need to mentally check off every single step here before you ever click that sell button. Number 1. Is there a clear prior uptrend? 2. Is the upper wick at least twice the size of the body? 3. Is the price actually hitting strong resistance? And 4. Have you waited for a lower closing confirmation? Going through this mental checklist builds a really sharp, highly disciplined trading mindset. As we wrap up this explainer, I really want to leave you with a thought on trading psychology. You can memorize a candle shape in about 2 minutes. Anyone can do that. But mastering your greed, your fear, and having the patience to sit on your hands and wait for confirmation, that takes real discipline. Ultimately, your edge in the market isn't your eyes, it's your rules. So ask yourself before your very next trading session, are you actually trading the market signals, or are you just trading your own impatience? Welcome to this explainer. Let's build a tactical blueprint to protect your capital and lock in profits. Be honest, are you trading on emotion? Because that's literally the main reason most traders lose money. We need to ditch those emotional false breakouts and replace them with strict mathematical discipline. Okay, here's our battle plan for today. We're tackling entries, stop losses, and take profits. Let's get right into it. We'll use the shooting star candlestick today. It's a massive downward reversal signal showing institutions rejecting higher prices. You'll spot a small body with a massive upper wick. That shows aggressive sellers taking total control. Step 1 is your entry. But wait, never jump in immediately. You need the next candle for confirmation. Now here's the absolute golden rule of risk. Never risk more than 1 to 2% per trade. Step 2. Set your stop loss just above that wick's high. This totally protects you if things go south. Setting strict dollar limits, like risking just $250 on a 25K account, completely prevents catastrophic losses. Just divide your dollar risk by the stop distance. Boom, that's your exact position size. No more guesswork. Alright, step 3. How do we mathematically decide exactly when to lock in those hard-earned gains? You need a minimum 1 to 2 risk-to-reward ratio. Honestly, this is absolute survival mode for long-term trading. Say you risk $2.50 to make $5. Just target those previous, nearby support zones. With this math, even a modest 57% win rate keeps you highly profitable. Losses are just inevitable overhead. Want to truly ditch the emotion? Tools like Capitalize.ai run these exact rules using plain English. They seamlessly monitor the market and flawlessly execute all 3 of our pillars without a single second of hesitation. So, ramping up this explainer, I have to ask you, is your next trade going to be math or emotion?